And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, friends and traders. Welcome to the market forecast for Wednesday, July 6, 2022. Today, again, I am JD. I'll be your host for the rest of the week while Hogue is out on vacation. As always, thank you for choosing to spend your time with us this morning. Hopefully we can all walk away from this with just a little bit more knowledge and understanding than we had before we started. Remember to hit that like button. Feel free to share your comments and feedback in the chat. We do appreciate all feedback. And if you haven't already, go ahead and subscribe to our channel so you get those wonderful updates every time we go live. Just a reminder that with Hogue out, there will be no group coaching today. I repeat, no group coaching today. I apologize for any inconvenience there, but Hogue will be back next week, so you have that to look forward to. What's on the docket today? The economic calendar. 8:45 this morning, Central Time, we have the PMI composite final release. ISM Services Index at 9 o'clock Central Time, JOLTS at 9 a.m. Central Time also, and the release of the FOMC minutes from the last FOMC meeting. That's coming out at 1 o'clock Central Time today. Overnight, stocks in Asia closed mostly lower, with the Shanghai Composite down 1.43%, the Nikkei closed down 1.2%, and the Hang Seng Index closed down 1.22%. Meanwhile, stocks in Europe were ripping higher. DAX is up 1.47%, the French CAC up 1.56%, and the FTSE up 1.81%. And stocks here in the U.S. are poised to open just a little bit higher this morning. The VIX, after dipping a little yesterday, the VIX is up just over 1% this morning to 27.83, and the yield on 10-year Treasury note has dropped to 2.8%. So, with that, let's see who we have joining us this morning. Good morning, everyone. Tachyon, hello, chilling with Dylan, Brian, Shaw, Bill Phillips, Just Wave, Patrick, Sarah, Glitter, Dan Trader, Charles March, James Swan, Nicholas, Frederico, Mike. Good morning, everybody. Thank you for joining us. JB, yep, it's JD, Dan. Thanks. All right. Well, what do you say we just get right into it then? Let me queue up some charts here. And here we go. We are off. So again, today we're gonna have another sort of abbreviated session, cover the ES, NQ, crude oil, and gold. So let's get started right away with the ES. Here is the daily chart of the September contract. We came into the week looking to see some sideways price action in the ES, and so far we really have not been disappointed. It kissed this 20-day moving average during yesterday's overnight trading session, then took out Friday's low here by just 2 ticks. 2 small ticks before turning around to close on the close higher on regular trading hours. Closed out on the high of regular trading hours, I should say. Volume was pretty decent, just over 2 million contracts traded, and it also added about 10,000 in open interest. Right now, prices are resting snugly between sort of the VWAP, the 10-day, and the 20-day moving averages, which are kind of slowly converging on each other. Let's flip it over to the 4-hour chart. Condense this just a little bit. So going back to last Wednesday, this 3740 area right around here has been kind of the line in the sand. It's made roughly half a dozen attempts to break through here, and we're seeing buyers step in immediately every time. We've likely got some stops building up down here that will eventually need to be taken out, and that could mean a quick trip down to this 3680 level when it does happen. For right now, though, we have these two short-term moving averages just kind of resting on top of each other, which tells me this market is still sort of searching for some short-term direction. Let's click over to the 30-minute. So here we see the ES playing Friday's value area nicely from low to high here, taking out Friday's low by just a couple ticks, like we said, right in the open, and then running up to take out the Friday's value area high right at the end of the day. There was a little jacking for position after the 8:30 Central Time open down here, but by 10:30 the bulls had pretty much taken control and it was off to the races. With the exception of the small pullback right here, this looks to me to be just kind of a classic trend day. Overnight inventory is fairly mixed, with prices hovering just above yesterday's value area high and right around Friday's point of control also. Overall, looking at a continuation chart, overall I think they're still getting mixed signals from this market right now. These short-term moving averages are still fairly flat, and we're not getting much information from this slow stochastic oscillator either as far as momentum goes. Sort of gently sloping higher, but it's not giving us a whole lot. So this market is still kind of range bound, and there might be some opportunity to play both sides of it. And obviously the first step to follow through from the upside will be to take out yesterday's high. And after that, the next stop will be to take out last Monday's high right here at the 3950 level. And like I said, a move to the downside will be to run these stops below 3740. That's kind of what I'm looking for in this market today. Let's see what's happening with crude oil this morning. So here is the daily chart for the August contract. We all saw it. This move was just a killer yesterday, huh? It looked like there was really no chance to get in or out of this market while this move was happening. Very dangerous for smaller retail traders. The August contract ended up settling almost $9 lower. In all, 591,000 contracts traded in the August contract, and it added roughly 4,500 in open interest. According to the most of the news sources I looked into, this move was fueled by that strong dollar and rising recession fears, which we sort of touched on a bit in the recap yesterday. I threw in a couple of channel lines here for this bear flag that had been forming, which was obviously broken through. Took out our weekly kickoff low pretty early on in the session and closed below this low from back here in June. Right here. This June 22nd low. We can see that the 10 and 20-day moving averages have now crossed below the 50-day moving average, which is kind of a signal of some more weakness to come. Overnight, there was a retest of the weekly kickoff low. Just a small little pop, but prices are still trading below that area right now. Let's check out the 4-hour. So here's sort of a zoomed-in look at that bear flag. I honestly was not expecting that move yesterday, and I really wanted to see another test of this upper channel line and maybe burn a few stops before heading lower. I'm not disappointed or anything that didn't happen. I love seeing a good chart pattern play out, but I did miss the move. So on to the next one, right? We do have these shorter term moving averages sloping steeply lower. I think any kind of pullback from yesterday's move will run into sellers right around this 20-period moving average here, which is lining up nicely with this low from last Thursday also, right at the bottom, just kissing this bottom channel line of this bear flag also. So on the 30-minute, well, there it is in all its glory. This was just a violent move. It started immediately after the 8 o'clock regular trading hours open. We can see that volume did start to dry up a little right around the time this low at 12:30 Central Time was made, and prices did recover just a little bit. You see here this little bit of strength pushing prices higher to close just above this point of control at 99.30. Overnight inventory pretty much mixed. Price is still trading inside yesterday's value area and above yesterday's point of control. And this weekly kickoff low is sort of holding as a minor line in the sand for the moment. Back to this continuation chart. Overall, it's kind of rare to see two huge down days back to back, so that's not something I'm looking for. I don't expect another 10% drop today. That said, a minor pullback to take out a few week shorts isn't out of the question. If that were to happen, I'd be looking at the somewhere around the 104.5 level very closely for an opportunity to jump in the market. If not, the next likely target to the downside that I'm going to be looking for will be to take out this low from April here, from April 20, right here, this one, from April 25th at 95.28. That looks like a decent target to me. All right, let's move over to the Nasdaq. So here is a daily chart of the September contract. You see the Nasdaq also had a strong finish yesterday. After opening regular trading hours down more than, I think it was 1.5%, spent the rest of the day rallying to close up over 197 points higher. Volume was solid with a little less than 800,000 contracts traded, and the September contract added about 1,500 in open interest on this move yesterday. This 20-day moving average was sort of the focal point of yesterday's trading session. If you remember, it traded up there early on in the overnight session, made a run at Friday's lows, then rallied back to close the day almost dead on this line for the 20-day moving average. It was a strong move in my opinion. And we kind of see this 10-year sloping up, this 10-day moving average sort of sloping up just a little minute, converging a little more on that 20-day moving average right now. On the 4-hour chart. So unlike the ES, the Nasdaq was unable to take out Friday's low before making its run at this high from last Wednesday. So I'd like you some stops building up below that, sort of around this 11,300 area. I would call it 300 to 350 area. The 10-year moving average has crossed above the 20-day moving average for now. 20-period moving average for now, signaling a minor bit of strength in the market early this morning. There wasn't really any follow-through during the overnight session, and this could even be a little tiny bull flag setting up here, but let's put a hold on that for right now. We'll come back to that later, maybe later this afternoon. On to the 30-minute. So here we see the Nasdaq did take out Friday's regular trading hour low by just a couple ticks, but not the Globex low. So like I said, we do likely have some stops starting to build up around that 11,300, 350 area, which has held this market up going back to mid-June. If we squeeze this 4-hour chart down a little bit. Yeah, this level has been holding for the better part of a month. Very similar to the ES yesterday. With a few head fakes aside, there weren't too many chances to buy the dip yesterday. And if you tried to step in front of this to short it, you likely got run over. Overnight inventory, fairly mixed. Prices are currently hovering above yesterday's value area high. There's a good chance we still have some trapped shorts here from yesterday too. So this could also be an opportunity to kind of put the squeeze on them. We'll see what happens after the open. Here's our continuation chart. Overall, this market is still giving off some mixed signals, but we are coming off a fairly strong day. The next stop to the upside that I'm looking at is this 50-day moving average and this high from last Monday. Those look to be solid targets right now. And as I said, if things turn south, I feel a stop run below that 11,300, 350 area will be the move. And lastly, let's take a look at gold. So here's another one. This market melted right through our weekly kickoff low, taking out these lows going back to January. Like they weren't even there. And all just over 300,000 contracts were traded, and the August contract lost 5,000 in open interest. I don't know about you, but that kind of sounds like a good old-fashioned stop run to me. You could see prices just kind of tiptoeing along these 10 and 20-day moving averages for the last 2 weeks, sort of just searching for direction. And then yesterday, it was just curtains. Here's a look at the 4-hour. Look at that move. It's just kind of straight down all morning. In the old days, if you had your stop in, if you had your stop order in with a broker in the pit, there was no way you didn't sell the low tick of the day. Just brutal. The slope of these shorter-term moving averages has steepened a bit. Very similar looking to the 4-hour crude oil chart, actually. Both the 10 and 20 period have dipped below our weekly kickoff low. And it looks like this market remained a little weak overnight too, just a bit. Let's see the 30-minute. So we can see here that there was really no stopping this move yesterday, but we did get some consolidation in the early afternoon. Overnight inventory kind of mixed to lower, maybe a little bit short. Prices have dipped below yesterday's low, but it looks like, yeah, we're trading back inside yesterday's value area right now. Overall, it's possible that all the week longs going back to the beginning of the year were kind of shaken off the stick yesterday. So a little recovery bounce wouldn't be out of the question today. If that were to happen, I'd be keeping an eye on these previous lows around the 1780 area. If not, our next downside target could be more stops below this low from December. I think that's it. Yeah. This December low around 1754. And that's it for our charts today. Let me check in on the chat and see what everybody has to say. Good morning, good morning, good morning. James, blue step 2 today. Take a deep breath, be patient, get back in there, keep working at it. Good morning, good morning. Is MCL open for the combine? You know, I'm not 100% positive. I can look into that. I'll get back to you on the recap this afternoon, Juan. Orion got trapped short trading the Nasdaq yesterday. Yeah, that happens on those ripping moves. They're hard to step in front of, and you got to keep stops real tight. There's still probably going to be some slippage when it's moving like that also. So even tighter stops wouldn't be a bad idea. Glitter wants to know why Hogue calls me the dancing bear. So I started at Top Step back in late December of 2019, and I spent the first month of the year, January, trying to convince everybody that stocks were about to puke, and just gave me the moniker the dancing bear, and because I was bearish the stock market. Eventually I was proven right for all the wrong reasons though, but ever since then, yeah, the nickname has held strong, the dancing bear, because I wanted to short stocks in early 2020. That's it. You can go back and look at some of those old forecast and recap videos. The proof's in the pudding right there. So, with that, just a reminder, again, no group coaching today. I still have these charts up, don't I? There we go. So again, no group coaching today, and no make Hogue money either today. But both will be returning next week. So with that, I will let everybody off a little bit early. Prepare for the index open coming in just about 25 minutes. And I will catch all of you on the market recap later this afternoon. All right, take your deep breath, everybody, and have a great trading day. I will see you all this afternoon.